If you're receiving Social Security or SSI, there are major changes happening right now in January 2026 that you absolutely need to know about. Some payments have already arrived, others are coming later this month, and there's a payment schedule shift that's confusing thousands of people. Plus, the cost of living adjustment just kicked in. But many of you aren't feeling the difference in your bank account, and I'm going to explain exactly why that's happening. Stay with me through this entire video because missing one of these payment dates or not understanding these changes could cost you money. Before we dive into all the details, I need you to hit that subscribe button right now for Benefit Vault. If you rely on Social Security, SSI, or any other benefits, you cannot afford to miss updates like this. I break down every change, every payment date, and every adjustment in a way that's easy to understand. So subscribe, turn on notifications, and give this video a thumbs up, because we've got a lot to cover and every single detail matters for your monthly income. Now let me ask you something, and I want you to drop your answer in the comments below. As we start this new year, what's weighing on you the most financially? Is it rising prices on everything from groceries to gas? Is it healthcare costs that keep climbing? Or is it just the general uncertainty about what's coming next? Let me know in the comments because I want to understand what you're dealing with, and your input helps me create content that actually addresses your real concerns. All right, let's walk through the January 2026 payment schedule step by step because there's been some confusion, and I want to make sure you know exactly when your money is coming. First, if you receive Supplemental Security Income, which is SSI, your January payment actually arrived early on Wednesday, December 31st, 2025. Now, before you get excited thinking you got extra money, let me be very clear about this. That early payment was not a bonus. It wasn't extra money. It wasn't a mistake. It was simply your regular January SSI payment sent early. Why did it come early? Because January 1st was a federal holiday, New Year's Day, and Social Security doesn't process payments on federal holidays. So when the first of the month falls on a holiday or weekend, SSI checks automatically get moved to the last business day before that. This happens every single year, and every single year it causes confusion because people think they got an extra payment. You didn't. It was just your January payment arriving in December because of the calendar. Now, here's something really important that's going to happen later this month that might confuse you even more. February 1st falls on a Sunday this year. That means your February SSI payment is going to arrive early on Friday, January 30th. So if you're an SSI recipient, you're going to see another deposit at the end of January. Some people are going to think they got two payments in January, but that's not what's happening. The first payment you got at the end of December was for January. The payment coming at the end of January is for February. Keep track of this so you don't accidentally spend February's money thinking it's extra. Moving on to regular Social Security payments. If you receive both Social Security and SSI, or if you started receiving Social Security benefits before May of 1997, your January Social Security payment went out on Friday, January 2nd, 2026. For most people in this group, that money has already hit your bank account. Normally, this payment would come on the 3rd of the month, but since January 3rd fell on a weekend this year, the payment was sent on the previous business day instead, which was the 2nd. Now, for everyone else receiving Social Security, whether that's retirement benefits, disability benefits, or survivor benefits, your payments are based on your birthday, and those payments are coming later this month on specific dates. Pay close attention to this because your birth date determines when you get paid. If your birthday falls between the 1st and the 10th of the month, any month, your payment is scheduled for Wednesday, January 14th. If your birthday is between the 11th and the 20th, your payment is scheduled for Wednesday, January 21st. And if your birthday falls between the 21st and the 31st, your payment date is Wednesday, January 28th. Here's something that's going to confuse a lot of people, and I'm seeing questions about this already. January 7th looks like it should be a payment date. It's a Wednesday, and Social Security payments usually come on Wednesdays. But January 7th is not a payment date this month. It's not on the schedule. So if you're sitting there on January 7th waiting for a payment and it doesn't arrive, don't panic. That's completely normal. It's just not a scheduled payment date for January 2026. Let me talk about how these payments actually arrive because timing can vary depending on your bank. Most people who use direct deposit will see their payment arrive overnight or very early in the morning on their scheduled payment date. If you have a Direct Express card, which is the government debit card that some people use for their benefits, payments usually load on the same day. though the exact timing can vary from person to person. If your payment doesn't show up immediately on your scheduled date, don't freak out. Social Security recommends waiting a few business days before you start calling or worrying because banking delays still happen, especially around holidays and weekends. Now let's talk about the biggest change that's affecting your payment this month, and this is what everyone really wants to know about. The cost of living adjustment, also called COLA, just kicked in for 2026. This is the annual increase that's supposed to help your benefits keep up with inflation and rising costs. For 2026, the COLA is 2.8%. For the average retired worker receiving Social Security, that works out to about $56 more per month. Let me break down what that means in actual dollar amounts. The average monthly retirement benefit was about $2,150 in 2025. With the 2.8% increase, that rises to about $2,271 in 2026. That's a $121 increase, but after Medicare premiums are deducted, which we'll talk about in a minute, the actual increase most people see is closer to that $56. This COLA increase affects nearly 71 million Social Security beneficiaries. That includes retirees, people on disability, survivors receiving benefits, and more. About 7.5 million SSI recipients also got this increase, and they already saw it with that early payment at the end of December. Now, here's something important that a lot of people don't realize. You don't have to already be receiving benefits to get this increase. The COLA is built directly into the benefit formula. So even if you're planning to claim Social Security for the first time later in 2026, or even in future years, you'll still get the benefit of this 2.8% increase, because it's already factored into how your benefits are calculated. These increases apply across the entire Social Security system, not just to retirees. For an aged couple where both people receive Social Security, the average combined benefit rises to about $3,280 per month in 2026. A widowed parent with 2 children will average just under $3,900. A disabled worker with a spouse and 1 or more children will average about $2,937. These numbers matter because they show that Social Security supports entire households and families, not just individual retirees. But here's the frustrating part that I know so many of you are experiencing right now. Even with this cost of living increase, most people don't actually feel much of a difference when they look at their bank account. And there's a very specific reason for that. Medicare Part B premiums increased again for 2026. The standard monthly premium is now $185.90. That's nearly $18 higher than what you were paying last year. On top of that, the annual Part B deductible also went up, rising to $283. For most people, Medicare premiums are automatically deducted from your Social Security check before you even see the money. So while your gross benefit went up by 2.8%, the amount that actually lands in your bank account doesn't feel dramatically different because that Medicare increase ate up a big chunk of your COLA. You might have gotten $56 more from the COLA, but 18 of that is going straight to Medicare. So your actual increase is only about $38. That's the reality that so many beneficiaries are dealing with right now. There is something called the hold harmless rule that's supposed to protect beneficiaries from seeing their Social Security checks reduced because of Medicare premium increases. This rule prevents most people from having their net Social Security payment go down even if Medicare premiums go up. However, this protection doesn't apply to everyone. New Medicare enrollees and higher income beneficiaries aren't covered by this rule. That's why 2 people can receive the exact same COLA percentage and still have very different experiences when they look at their actual payment amounts. This is where you start to hear a lot of debate and frustration from beneficiaries. Many people are saying the COLA isn't enough to keep up with real-world costs. Your rent didn't go up by 2.8%. It probably went up by 10 or 15%. Your grocery bill didn't increase by 2.8%. It probably doubled in some categories. Your utilities, your prescriptions, everything costs more. And that $56 increase doesn't come close to covering the increased expenses you're facing. At the same time, economists and policymakers argue that these COLA increases add pressure to Social Security's long-term finances. There's this ongoing tension about how to keep the system solvent for future generations while also making sure current beneficiaries have enough to live on. It's a complicated issue with no easy answers, and it's part of the larger conversation about how Social Security will survive in the decades ahead. January 2026 also highlights some longer-term structural changes that are easy to overlook, but really important to understand, especially if you're planning when to claim Social Security. The full retirement age continues to gradually increase. For people born in 1959, full retirement age is 66 years and 10 months. Beginning later this year, for anyone born in 1960 or later, full retirement age becomes 67. Why does this matter? Because if you claim Social Security benefits at age 62, which is the earliest you can claim, you can permanently reduce your monthly payment by up to 30%. That reduction stays with you for the rest of your life. Waiting until your full retirement age gives you your complete benefit amount with no reduction. And if you delay claiming benefits beyond your full retirement age, all the way up to age 70, you earn delayed retirement credits worth about 8% per year. That can significantly increase your monthly payment. Work rules have also shifted for 2026, and this is important if you're working while receiving Social Security. If you're under full retirement age, you can now earn up to $24,480 in 2026 before Social Security starts withholding benefits. In the year you reach full retirement age, a higher limit applies, $65,160. And once you reach full retirement age, there's no earnings limit at all. You can earn as much as you want without affecting your Social Security benefits. For people receiving disability benefits, there's an important update you need to know about. The substantial gainful activity limit rises to $1,690 per month in 2026. What this means is that disabled beneficiaries can now earn more money from work without losing their eligibility for benefits. This gives some people more flexibility to work part-time or try returning to the workforce without immediately losing their disability benefits. Taxes are another piece of the puzzle this year. The maximum amount of earnings subject to Social Security payroll tax rises to $184,500 in 2026. The amount of income you need to earn one Social Security work credit increases to $1,890, with a maximum of 4 credits per year. There's also some good news on the tax front. There's a new $6,000 federal tax deduction for Americans age 65 and older that applies to the 2025 tax year that you'll be filing soon. If you're married and both spouses are 65 or older, you can claim up to $12,000. This deduction is temporary, currently set to run through 2028, and it's designed to reduce how much of your Social Security income gets taxed. This is particularly helpful for middle-income seniors who are paying taxes on their Social Security benefits. Speaking of good news, there's been a major change that's already helping thousands of public workers. The Social Security Fairness Act is being implemented, which ends the windfall elimination provision and the government pension offset. Many teachers, firefighters, police officers, and other public employees who had their Social Security benefits reduced because they also received a government pension are now seeing adjusted payments. Some people are even receiving retroactive amounts going back months. For these families, this has made a meaningful and sometimes life-changing difference in their monthly income. At the same time, there are still concerns and challenges within the Social Security system. Overpayment recovery continues to be an issue where Social Security reduces monthly checks to recover overpayments, even when those overpayments weren't caused by fraud or anything the beneficiary did wrong. Staffing changes at Social Security offices, increased reliance on digital access, and stronger identity verification rules continue to affect how easy it is to get help when you need it. Fraud prevention is absolutely important, but so is making sure legitimate beneficiaries can access their benefits and get answers to their questions. Finding the right balance is still a work in progress. You may also hear talk online or see videos about possible tariff rebate checks or $2,000 payments that might be coming. Right now, those remain proposals. They are not guaranteed payments. They have not been approved by Congress. So while it's interesting to talk about and it's worth staying informed about potential future benefits, you should not rely on those payments when planning your monthly budget. Stick with what you know for sure, which is your regular Social Security or SSI payments. As we move further into January and settle into 2026, here are a few practical reminders that will help you stay on top of your benefits. First, keep your payment dates on your calendar. Write them down or put them in your phone. If you receive SSI and you're going to see payments close together this month, remember that one is for January and one is for February. Don't spend February's money in January thinking you got extra. Second, double-check your account information whenever you can. Make sure Social Security has your correct address, your correct bank account information for direct deposit, and your correct phone number. Keeping your information up to date prevents payment delays and makes it easier for Social Security to contact you if needed. Third, slow down anytime someone contacts you claiming to be from Social Security. Real Social Security representatives will never threaten you, demand immediate payment, or ask for personal information like your Social Security number over the phone. Scammers are constantly trying to steal from beneficiaries, and they're getting more sophisticated. If someone calls you demanding money or threatening to cut off your benefits, hang up and call Social Security directly at their official number. The bottom line is that Social Security is still doing what it's designed to do, sending payments on time to millions of people every single month. But how far those dollars actually stretch, how easy it is to get help when you need it, and how secure the system feels for the future are all things that affect people's confidence right now. Before we wrap up, I want to hear from you again. Drop a comment below and tell me how you're feeling as we start 2026. Do you feel cautiously hopeful about Social Security and your financial situation? Are you still worried about making ends meet? Or are you somewhere in between? Your voice matters. Many people read these comments, including people in government who make decisions about these programs, so don't be shy about sharing your thoughts and experiences. If these monthly updates are helpful to you, go ahead and like this video so more people can find it. The algorithm pushes videos with more engagement to more people, so by liking and commenting, you're actually helping other beneficiaries find this important information. Make sure you're subscribed to Benefit Vault so you don't miss the next update because more changes are coming throughout 2026, and I'll be right here helping you make sense of all of them. Share this video with anyone you know who receives Social Security or SSI, your friends, your family members, your neighbors who might have questions about their payments. The share button is right below the video, and it only takes 2 seconds to send this to someone who needs it. Thank you so much for spending time with me today. I know this was a lot of information, but every piece of it matters for understanding your benefits and making sure you're getting everything you're entitled to. Take care of yourself, keep an eye on those payment dates, and I'll see you again very soon with more updates. Stay informed and stay empowered, because when you understand your benefits, you're in a much better position to manage your finances and plan for your future.